Gautam, formally, good having you. Thanks for being with us today. How do you feel, Gautam, about the markets? Not on BQ Edge, but I think towards the fag end of December, when we had done a conversation, you had cited that there is a possibility that there could be a corrective move in the markets. It did come, was quickly bought into. How do the odds stack up now?
Well, yes, Neeraj. I think the going has been as per script. I keep saying this: if somebody was in a closed room and was just looking at the charts, it was very easy to map this entire run-up from the month of April, because we are in a very noisy local and global environment wherein you have one concern after another coming by, but the market is just discounting all of that. So December last week we had reached a point wherein the markets were just a little too euphoric and we needed a passing correction. So you had that 1,000-point dip coming in the month of January, and that did a world of good to the setup, because I think a lot of technical studies which were overbought, I think cooled off. The breadth which was extremely out of the box. I mean, 97% of the Nifty 500 stocks were trading above the 50-day moving average. This has not happened in 25 years. So this could not have sustained. The market needed to cool off. And with this 1,000-point correction, that percentage, which was at 97%, came down to about 55% very quickly. So, the market has reached equilibrium, and there is ambiguity in the system. Every time bull market corrections, they bring confusion. And confusion is the fuel of any bull market, which is beautifully played out in the last couple of weeks. And with the budget event, turning out to be quite favorable, global markets being extremely strong, liquidity, global and local being rock solid, the chart setup being as good as it can get, I do believe that we are in a sweet spot. We are in a very unique bull market, which cannot be studied in traditional technical analysis parameters. And that's probably the reason every single day we are reading this market in a very different light. And we do believe that there is much more upside, because this is the kind of momentum which cannot be broken easily. And when you have strong global markets, it just makes it very easy for the local bulls, to take the Nifty higher and higher. Just think of Nifty as a cricket team and its components, its players. And when you have all the players doing well at the same time, the team will win, the team will perform. And that's really what has happened in the last few months. You have underperformers like ITC, L&T making a solid comeback. IT stocks anyway doing well. Reliance Industries trying to rebound from 1800, 1850. So there are just too many factors suggesting that this bull market cannot be derailed easily. We have been working with 15,500 as our medium-term target, which we have been highlighting on this platform for the last many months. We're very close to that. There is some logic to believe that the market can see some correction around 15,500, but I think it's again going to be a passing correction, because when I look at the sectoral indices, the charts are still rock solid, and I do believe that over the longer term, the market will see much greater upside. So for investors, who want to stay in the game for the next 12 to 18 months, the next working target that we have put out on the Nifty is about 18,000. So that should give you some perspective as to how higher we can go, because I know there are a lot of people jittery, entering the market at these levels.
Actually, that was going to be my question. By the way, for everybody who's thinking that this is a perfect cricket team, people would be hoping it's not the Indian cricket team rather than the English cricket team, because they seem to be calling the shots today. But Gautam, yeah, it's an amazing behavioral point that you've made. People are jittery, and in fact, most people that I speak to, even experienced ones, are all saying that, hey, yes, we did have a correction and we bounced back. So the long only fund managers are long. But the tactical guys are saying, maybe we want to be a bit light, maybe sit on a bit of cash. Now, to you, my question is, how are you putting in the money to work right now? Are you sitting on a bit of cash, waiting for a correction, or no?
Well, this is the kind of bull market where you don't want to be waiting for a correction. I think I know a lot of people who have been waiting for the last 4-5 months. If you remember, there was a lot of chatter around the PE ratio in the month of September, October, when the Nifty had taken out 11,500. And in today's world, nobody's talking about PE anymore. I mean, there are a lot of other structural issues. So I think I keep talking among the team. You want to really go by the PE ratio, or you want to go by the GST collection that came in the month of December and January? I really feel that if you want to take a half glass full or a half glass empty approach, these are the two aspects to it. But chartically, I think it's just been perfect. I mean, in strong bull markets, moving averages play a very important role. And thankfully, I've had the experience of analyzing 2003 to 2007 and the 2013 to 2017 bull market. And in that period, something similar happened. Every time the Nifty corrected, it got bought into. And there is, wonderful sector rotation happening, for the last 4 or 5 months, which I think is really going to help the market higher. So FMCG and auto, I think, have been our top picks, and we believe that, they could take the Nifty higher. So small corrections from time to time will happen. Global markets are strong, and I think this momentum, because we don't have really any major congestion point at lifetime highs, it's very easy for the bulls to take the Nifty higher every single day.
Okay. Oh, by the way, viewers, I forgot to tell you, you can, of course, ask in your questions. So Nirav Shah has put in one question. I'll take the questions after 2 or 3 questions of my own, and then I'll take some of your questions. But yeah, please put in your questions for Gautam Shah, and I'll try and take some of them. Of course, I can't take all of them, but I'll try and take some of them for sure. Gautam, for the last few days when I'm putting out my trade setup, I kind of get this feeling that the bank Nifty has to be the key determinant of what the markets do if they were to correct a bit, simply because both Reliance as well as IT are not close to the ultimate peak levels that they were at. My question to you is therefore, banking, having done a little bit of hard work since November, for 3 months on a trot almost now, can it show a bit of a pause, or do you reckon that the rally in banks could continue? And part 2 of my question, after SBI's stellar show and this whole conversation around divesting 2 banks, could PSU banks have a major rally in the offing in the near term?
Well, I think there is always some outperformer taking the burden of an underperformer. I think, as you rightly pointed out, it's Reliance, IT, and banks, which decide the moment of the Nifty, because these 3 sectors put together, segments put together, constitute about 60-65% of the market. Banks had to come back. I think till about November, bank Nifty was unable to move hand in hand with the Nifty. If you look at the relative strength chart, it was actually underperforming. But once that level of 32,600 got taken out on the bank Nifty, if you remember, that was the high of December 2019, if I'm not wrong. So once that level got taken out, the bank Nifty completed a V-shaped recovery and the shackles were broken. So beyond 32,600, the momentum is back. Bank Nifty's outperformance is back, which is great news. And we've seen in the last few weeks that when the banks do well and when the banks leave the market, the screen is something different. And even, when we look at the setup right now, I believe the near-term target for that index is about 37,000, and the longer-term target for the bank Nifty is as high as 42,000. So when you have such large targets, at play, you can't expect the Nifty to falter. And that's probably the reason I feel that banks and IT are anyway, taking this market higher, and Reliance very, very soon is likely to join the party.
What about PSU banks, Gautam? A lot of people, fundamental people, long-standing watchers of the market, believe that the time for PSU banks is here. One of the guests actually went out and told me fundamentally that PSU banks could actually gain market share from private banks over the course of the next 10 years as an overall percentage as well. But be that as it may, how do the near-term charts look for PSU banks, especially after SBI's stellar show?
Well, if I have to play the PSU theme, it would only be SBI. I really wouldn't look at anything else. Everything else is pretty much a trading opportunity. And we've seen, in the past that whenever corrections happen, PSU banks, the second rung and the third rung, they just fall very quickly, and the setups get spoiled very quickly. And SBI, even at these levels, I'm not comfortable. I think the run has happened. A lot of the good news is already into the price. But I think I have been making this point. ITC can do what SBI has done in the last couple of months. Right from 170 levels, we've been bullish on this stock, and I do see it getting past levels of 300 sometime this year. So ITC and L&T are probably my 2 top bets for 2021 among the larger names.
Wow. Which effectively means, Gautam, that you seem to be focusing a bit on value. I mean, not that you're making a conscious effort, but if ITC and L&T are amongst your top picks, they are essentially the stocks which really haven't set the stage on fire until now. So you kind of, are you doing a bit of a techno funda call out here, or this is purely on the basis of the patterns?
No, I think it's about risk and risk reward. I mean, you could use fundamentals, you could use technicals, but I think the kind of risk reward I need to have at 15,000 index, I better be careful, because in January when that fall happened, it looked ugly on the screen. And believe me, you can hold the flag of a bull market when the Nifty is down 300, 400 points. Everybody just shies away from the screen. Yeah. So keeping risk reward in mind, I mean, ITC gives you a wonderful dividend yield. It's a great brand, it's a great story, and a great chart more than anything else. So I think it could be one of the better movers, and 170 to 230, I think, is a very large move in percentage terms. And L&T, after underperforming for 5 years, the India structural story, I think the industrials, I think the capital goods, the entire basket of capital goods, I think could be the story of the next 2 to 3 years. And it's still covering up for the underperformance. I think the outperformance is yet to come. I think an L&T can easily become a 2,000 rupee stock. A Siemens can easily move up 30-40% from current levels. So structurally, I think both themes look very strong for the long term.
Interesting you say that. Just before we dwell on to the others, Gautam, since we had mentioned financials, can I just make a quick segue into the non-lending financials as well? And any thoughts on, say, insurance, which is kind of now lying low after having a decent run, or asset management companies or brokerages? I mean, some of which had a wild move in 2020.
Well, NBFCs have had their run, so I'm not very sure whether you could be buying into them at these levels. I think it's been a stellar move for many of them, and the risks of a correction are quite high. But insurance, I think, is a structural theme for the next 5 to 7 years. At Goldilocks, usually we do not look at things beyond a year, because I don't think you have visibility in today's challenging and noisy world. But I think insurance, I think the way it's playing out fundamentally and technically, I'm very convinced it will lead to many multi-baggers. And HDFC Life out there has been my top pick all along. I think it's a great brand, it's a great chart, and it might just mirror what some of its other stocks in the same space have done. So clearly HDFC Bank. And financial services, I think, as a theme looks great. I mean, everybody is into the stock markets these days. People who are always into FD have moved into the equity markets. People are talking about gold. So you cannot ignore financial services. And I think in the brokerage space, I think ICICI Securities and Angel Broking, I think, are two stocks and charts, which have a very good setup. And again, going with the financial services theme, CDSL, I think is one stock that we've really liked all along. It's been a very steady mover, and it might actually do what a Tata Consumer has done in the last 3 years.
Wow, that's tall. So okay. Let me try and rephrase, and then we move on to the other things. Are most of these companies seem to be in a steady uptrend, right? They are not the companies which might be at an inflection point of sorts. Would it be? I mean, I'm just trying to understand from you, how do you look at them?
Well, at a 15,000 index, you don't have many companies at inflection point. That is past, I think, many months back. And in a bull market, the markets don't give you opportunity again and again. There are so many stocks after they broke out, they just didn't come back. People were waiting for that pullback to happen to enter, but it never really happened. But if there is something that you can buy which is closer to an inflection point, I would still say the auto index. I think if you look at what Bajaj Auto has done, Hero Moto, M&M, and Maruti, which remains our favorite, and Tata Motors, obviously, the bigger angle there, which we have been, very positive on from a charts perspective. I think the auto index will go back to its lifetime highs of about 12,000. So that's another 1,000 points upside from current levels. And it looks like a structural story to me as well. I mean, on the ground, you keep hearing so many positive things, and the charts are very well in sync with all of that. So keeping inflection point and risk reward in mind, auto and FMCG are my best bets.
Well, Gautam, I must compliment you. It was a splendid call end December to say that autos could actually do what metals have done, because that's what happened, right? Metals have consolidated despite good results, and autos have really shown through. I mean, Tata Motors is a case in point, or auto ancillaries are a case in point. Could you just tell us whether in autos, would you bet on the mid-sized auto ancillaries more, or would you believe that the larger auto players, be it Tata Motors, maybe two-wheelers, maybe what have you, tractor companies, could do well? Mahindra and Mahindra certainly seems to be in focus on the fundamental side. So what is relatively looking better, large cap autos or mid cap auto ancillaries?
See, large cap auto is more of a positional trading idea, something that you could hold over many weeks to a few months. And I think within that space, Maruti is clearly right up there. It's underperformed a little in the last 1 month, but I think it will come back and Maruti could eventually become a 5-figure stock once again. So I remain very positive. Other names, I think Tata Motors at these prices and, with a lot of the news in the price, I'm not very comfortable entering. But if you have to play this theme structurally, once again, auto ancillary, I think is more of a theme for the next 2 to 3 years. And I'm seeing a lot of stocks, breaking out of lovely patterns, which could have an impact on the price action for the next couple of years. I mean, case in point, Endurance Technology, I think a company that we really like, I think it could be one of the star performers of this year.
Okay. Well, let me try, viewers, just a second before we move on to the other questions. There are some questions around small caps, large caps, but since Gautam has brought it out, I'll just try and see if I can do a share screen out here for the benefit of all of you. Since Gautam has been mentioning this name, let me try and do this. Okay, Gautam, can you see this?
Yes, I can.
Okay, would you want to just maybe explain this, because I think this is the Endurance Technologies chart.
Yes, I think if you look at the move from the March, to 20 lows, it's been absolutely clean and crisp, making higher tops and higher bottoms. This is a kind of V-shape or a U-shape recovery with a lot of stocks are, undergoing in the market, and Endurance just happens to be one of them. And if I'm not wrong, the results are today. So we see the V getting completed at levels of around 1570. And, post that, the real outperformance will start. You could see a 1750, maybe even a 1900 and beyond. So this is something which a lot of stocks are doing in the auto space. I mean, M&M has done exactly that. Bajaj Auto, I think, consolidated for a couple of years before breaking out in the recent past. So this is a very common chart in today's bull market.
Okay, viewers, keep in mind, I don't know if you can figure this out, but this line is at around the levels of 1570, 1580 that Gautam is talking about. And he's suggesting that if it breaks above these levels, then, and which he believes it could, the stock could actually move higher. So I think that's the point that Gautam Shah was trying to make. Gautam, okay, let me just try and actually mix and match between questions that people are asking versus others. Yeah, there are a lot of questions on the dollar index and the global markets. Viewers, I'll take those last with Gautam since we have dwelt into India. Let's just finish the Indian conversation, and then we'll ask Gautam about the global pieces. We'll also ask him about Bitcoin. We have about 10 or 12 minutes left. I don't know if Gautam has a view there, but yeah, Gautam, yeah, it's a pertinent question. Will the pharma, okay, Pradeep Babat is asking, will the pharma index be outsmarted by the Nifty, or can it still create alpha over Nifty? Any thoughts here?
It will not be outsmarted. I think it's just gone through its routine consolidation. 13,500 was the previous congestion point from where the pharma index saw a 1,000-point fall in the month of January. It's now coming back. Stocks are looking great. Names like Sun Pharma, which underperformed for 3 years, are now perking up really well. It's an index heavyweight. DV's Lab, Newland Lab, I think Ajanta Pharma, all lovely setups. So I think irrespective to what happens to the Nifty, I think pharma will do well, and it will eventually move to a level of about 15,000. So we are talking of 20% upside for the pharma index. And one important point here, as the Nifty gets to that 15,500 number, which I think would be a resistance, what could happen is that the focus shifts back into the defensives. So IT and pharma might again start to do well. And you could be entering a phase wherein Nifty takes a backseat, whereas the mid caps and small caps, continue to run. Because if you study the relative strength chart, mid caps and Nifty have just managed to move hand in hand. You've not seen outperformance, but post 15,500, you could see mid caps doing much better. And our target for the mid cap 100 is about 27,000. So people who are invested in their mutual funds, stay with it and continue your SIP.
Well, and that might be sound advice too. I think a lot of people are feeling a bit left out or feeling disillusioned that, oh, what's happening to my mutual fund returns? Give it some time. Okay, I think Gautam in part answered a question asked earlier by somebody else about the mid caps and the small caps space. So I think he just mentioned what he feels. So I hope that answers your question. There's a gentleman, Gautam, by the name of Jatin Agarwal, who's asking about the heavy compounders of the past few years. What could they do? So while he's not given names, but I'm guessing that you're probably talking about the HULs, the Bajaj Finances, varied sectors have had these heavy compounders, right? Any thoughts here on any name or any theme out here?
You need to be very careful at such index levels, to be making serious commitments. So the compounders of the last 4-5 years, I wouldn't be comfortable, adding fresh longs. I would definitely stay long a Bajaj Finance, a Bajaj Finserv, the entire chemicals pack, if you look at an Aarti or you look at an SRF, they're all a hold. But the risks to buying fresh at these levels, I think, is just too high, to make that commitment. So I would really go with the underdogs. I would go with the underperformers. And that's probably the reason I say that auto, FMCG, and capital goods are the better bets in the market at these levels.
Okay. A question by an anonymous attendee on the outlook on the sugar sector. Classically, mid-cap fundamentals have changed for the better. The results were mixed. Any thoughts here, Gautam? There are very few reasonably large companies for institutions to bet money on, but do you have any thoughts here?
Well, nothing exciting from a medium-term standpoint. I mean, there have been false starts just too many times in the past. We keep discussing the fundamental story and how the triggers are going to shape up. But the stocks don't move. At the end of the day, the stock prices say a lot about the fundamentals. I mean, Tata Motors is a case in point at 120, 130, 140. Maybe the fundamentals was not there, but the price action knew that there's something happening on the ground. So sugar is an avoid. At best, it could be a trading idea from time to time. But I think the another pocket, which we really like is fertilizer. So if you look at what Chambal has done, coming out of 7 years of underperformance, the screen is looking good. The GNFCs of the world, Coromandel Fertilizer International, all of these structures are very good if you want to play the fertilizer team for the next 3 years. And anyway, I think the agri theme is here to stay. So I would rather bet on that.
Okay. Well, which is the next question? Somebody's asked this as well. I request for the questions to come in on the Q&A side and not on the chat side, but I will nevertheless take it simply because it's a pertinent one. We spoke about PSU banks, Gautam. Leave that out. What about PSUs? I mean, fertilizers are largely PSUs, but what about some of the others? BPCL and the likes are in focus. There is some divestment going to happen. Concord has been up 8-9% in the last 2 days because maybe the lease rentals are lower, so on and so forth. But PSUs are right up there. Do you like the space? Do you like something within the space?
We love the space selectively. I think the risk reward is great. People have given up on a lot of names. OMCs, every single time they start to do well, there is a lot of hope and then they falter. But this move, I think this up move that you're seeing in BP and HP looks real. And I'm looking at a 25 to 30% upside on BP. BEL, Bharat Electronics, is an idea that we have been sharing with our subscribers. I see it as a potential doubler over the next 1.5 years. MSTC, I think, is a great play. I spoke about it sometime back. It's already 2x for us. Still looking good as a structural story. Stocks like RITES, I think that's also setting up well. And Container Corporation, as you rightly mentioned, is another setup which is developing very well. And the comfort with which I get with some of these PSUs is that support levels are not very far away. Which might not be the case for many stocks in the market. And these are, companies with solid earnings, great brands. It's just that the institutional action was missing, which now seems to be coming back.
Got it. Gautam, one last equities question, then maybe a couple of questions from the global markets as well, and then we'll let you go. One of them is on the real estate sector and seems to be coming out of a long drawn flat / bear market, however you define it. The last 1.5 years have been terrific for some of the names, but as a space at large or the index, how do you see it?
Well, I think I keep making the point that don't look at real estate on an absolute basis, look at it on a relative basis. So it was in a downtrend, it was an underperformer for almost a decade. And you had reached a point, I think 6 or 8 months back, where the relative strength chart versus the Nifty was at a life low. And from there, we've seen this recovery in the last 6 months. A stock like DLF has doubled in value. Godrej Properties has been a star performer. Suntech Realty, Brigade. And these are setups, which will give you greater returns going forward. Because I think a 10-year underperformance cannot be, completed with just 1 year of rally. I do know a lot of people are jittery buying at these levels because they seem to believe that, it's done well for the last 6 months. But look at the price damage of the last 10 years. If you look at it in that context, I think many of the real estate stocks can double even from these levels. But do not buy at current prices. I think there will be passing corrections in the market from time to time. And because the segment is high beta, it tends to fall. Like a DLF did fall about 10-12% in January when the markets corrected. So use that opportunity to top up for the long term.
Okay. Gautam, gold versus silver versus Bitcoin. You were bullish on silver relative to gold in December. Now I'm adding a Bitcoin there just for the chart's sake, not really I mean, I don't know how people can buy it really. There are some exchanges, but please be careful about the legalities. It's not illegal, but there might be rules against it coming ahead. You never know. But how do the charts look? Gold versus silver versus Bitcoin?
Well, Bitcoin, I don't have an immediate view. I think there's too much happening in equities to be really looking at anything elsewhere. Silver, I remain very positive. I think eventually silver will test a level of $34, which is a possible 35% up move in 2021. So, which means that it can actually beat some of the strongest sectors in the equity market. So, a large portion of your portfolio has to be invested in gold and silver. And at 1800 on gold, I really don't see too much downside. Anything happens in the world, it's gold that goes up. So with a $50, $70 risk, we are talking of a potentially $300 upside for gold back to 2100 and beyond. But another very important aspect which we have been putting out in our reports is the USD INR. I think it's been in this phase where USD INR underperformed for about 10 years. It was in a major downtrend. I'm seeing the first structural change of character for the USD INR. And if it keeps sustaining below 73, I'm getting the feel that you could see levels below 70 sometime over the next few months, and maybe even levels as low as 68. So this 10-year trend of dollar doing well continuously might just be changing, and we as investors need to keep that in mind, because it will change the entire dynamics for a lot of sectors.
Okay, Gautam, anything in metals or power? I mean, since there are so many questions, just one final question before we take the final question on global markets. But Tata Steel or some of the others, because you had cited that there could be some pullbacks. Are the pullbacks over? That is part one. Part two, anything on power, Tata Power, JSW, what have you? Those stocks are pretty active too of late.
Yeah, so metals went through a decent correction in January, has come back really well. We still like it. Our working target for the metals index is about 3950, which I think is good, 10% away from these prices. I think auto is a better buy at current prices. Metals is more of an hold. And in power, I think is again what real estate is going through. It looks like a structural change. So we have been liking Tata Power. I think it will move to levels of 110, 115, KC International, CESC, Kalpataru Power, all very good charts from a medium-term, long-term standpoint.
Okay, well, do you want to do that again? Just wondering. We do have one of the charts that Gautam mentioned. Let me just try and see if I can do a screen share again. One last thing before we ask about global markets. Yep, right here. Gautam, I think this is KC International's chart. You want to just briefly take us through this?
Yes, again, see, if you see the chart setup is so similar to that of Endurance, which we discussed earlier. So every single chart, of an outperformer looks like this. I mean, there's no rocket science really. It had this massive move from April, till about October, got into a range for about a couple of months. As you can see, there was a lot of congestion, a lot of choppiness. And then once 385 got taken out, this is what we call a continuation pattern breakout on the charts. And clearly we are looking at, the life high of 443, 445 to be tested. And once again, the real outperformance will come once 443 is crossed, maybe towards 500, 550. And with our channel check on the company, I think the results have been great. It's doing really, really well. So it's in sync with this chart setup. And the downside is limited at 380, 85.
Okay. Okay, cool. Gautam, final question. And that is on the global markets. How do you see those charts and how do you see them impacting our markets?
We can keep discussing and boasting about the India story, but the day the Dow is down 300 or the S&P 500 is down 50, Indian market opening looks completely different. And I think this is a very important component to be tracking the US markets, the S&P 500 in particular. And because we have been maintaining a positive stance there, we've had that comfort to believe that India will also tag along. So I don't see any signs of topping out for the US indices. I think 4140 is my next target for the S&P 500, which is about 6-7% away. Till the indices don't reach those targets, I think India should be safe. So I think that's one good way to really read the connect between India and the US market indices.
What about volatility and some of the other factors? Because VIX, etc., have been volatile. I think today morning I put out a chart of CBOE VIX being at the lower end of the range, etc. Do those factors have a meaningful impact?
I don't think so. If you look at the previous bull markets, these they can stay at the lower end of the range for many weeks and many months. If somebody wants to look at things with a slightly half glass empty approach, you might say that, okay, now it might start to perk up. That doesn't happen. I mean, VIX does not move like a typical price action. In fact, even if you look at Indian VIX, it is close to 24, which is quite elevated because we are used to seeing VIX levels of 12 to 17. But I think that's the new normal. I think 20 to 25 is the new normal for India VIX. So I don't think that should be a bother. One should just ignore that.
Great. Gautam, it's a pleasure having you as always. Thank you so much for being with us today and giving us your thoughts. And look forward, of course, to having you more often.
Thanks, Neeraj. Thanks for having me.